So this video is basically reviews or recap all the topics that we have covered for the course and for the entire semester. So altogether, there are 10 topics, and we started off with topic 1 is the need for regulating financial reporting, where we cover some basic stuff on what is accounting, the difference between financial accounting, managerial accounting, as well as the cost accounting. Then under agency theory, we look at the where does this agency problem originate? Okay, how did it occur in the first place? And what does it entail? Okay, what is the agency cost? And we look at two approaches, okay, to understand or to explain agency theory, okay, which are the shareholder value approach and also the stakeholders approach. Then we end topic 1 with the IFRS framework in terms of defining what it is and why was it established, as well as looking at some of the standards, the Malaysian accounting standards that are relevant to the topic. Then moving on to topic 2, we covered the conceptual framework for financial reporting, where we look at the 3 areas there, okay, some accounting concepts and principles, and identify who are the users of financial statements. And we look at some of the qualitative characteristics of accounting information. Okay. So we listed down the 10 concepts or principles, the main ones, starting from the principle of money measurement up until the materiality principle or concept in accounting. And for the users, we identify 5 main users of financial statements, starting from the management, then the investors and shareholders, creditors, suppliers, employees, and also the regulatory bodies. Now, on the qualitative characteristics of accounting information, if we look at some fundamental qualitative characteristics, okay, such as the relevance, the faithful representation, right, and the concept of completeness, neutrality, and also the best estimate. And we have to take into account the economic phenomenon vis-a-vis, or when we look at the information in the financial statements. And we have to ask what is the relevant information, okay, pertaining to that phenomenon. Okay? And this all entails the faithful representation of the particular phenomenon, the figures that are reported in the financial statements. And in order to enhance the qualitative characteristics, we look at the measures or the concepts of comparability, verifiability, timeliness, as well as understandability. And I have provided some examples using 7-Eleven. Okay, we refer to 7-Eleven annual report, and we have gone through the notes of the account to identify, okay, where to find the relevant concepts, okay, or principles that are relevant in accounting. Okay, for example, when we look at the definition, okay, of assets, for example, property, plant, and equipment, okay, where do we refer to and what principles is followed, right? And what particular method is used in order to measure, okay, the assets, for example, the depreciation, right? And what are the policies that are involved in the measurement and also in the recognition of those items. Okay, it can be assets, it can be revenue, recognition of revenue, for example. So I'm sure you by now you know where to refer to, okay, in order to look for all the principles and the concepts that are relevant in accounting. Okay. So what you need to do is to go back to the examples that we looked at in class, okay? Specifically the 7-Eleven case, right? Because we are using the 7-Eleven annual report. Now for topic 3 is the how financial statements are prepared and how to interpret some of the figures in the financial statement. And we look at the objectives, why financial statements are being prepared, some of the structure and content of financial statements, as well as the other components and some of the disclosures made in the financial statements. So we have looked at the 4 main items or statements, starting from the balance sheet or the statement of financial position. And then we look at the statement of comprehensive income or the income statement. And then the accounting cash flows, accounting statement of cash flows, and finally the statement of changes in equity. Right, so we also use examples of 7-Eleven, right? And the other components and disclosures made are, for example, the director's report, and secondly, the auditor's report, as well as, of course, the notes to the financial statements. Okay, moving on to topic 4, okay, this is where we perform the financial statement analysis, and we use basically we use the financial ratios, right? But before going into financial ratios, I have exposed you to horizontal analysis and also the vertical analysis. Okay, horizontal analysis look at the year-to-year change, right? You look at the trend, whereas the vertical analysis are interested to look at the items as a percentage of a total. So it can be total of assets if you look at the balance sheet, or the total of sales if you look at the income statement. And then under the financial ratios, we focus on the 5 areas or domains, starting from the liquidity ratios, and then the leverage, okay, followed by the efficiency ratio or the asset management ratios, profitability ratios, and also the market value ratios. I have explained first the calculation, how the ratios are calculated, and then the interpretation of the ratios, okay, how we can interpret and make some deductions based on the figures, and what are they used for, okay, in what circumstances, for which particular users, right, and what are some of the strengths, okay, of the ratios, particularly the market value ratios, as opposed to the other 4, which are accounting based ratios. Right, pay special attention to the market value ratio, specifically the price earnings ratio. Okay. And then moving on to the next topic would be topic number 6, which is the introduction to managerial finance, where this is the second half, the second part of the topic, which caters to the financial aspects, okay, of the course. Okay. So we did some definition, what is managerial or corporate finance. Remember the 3 areas, okay, the capital budgeting, the capital structure, okay, and also the working capital management. Then we touch on the forms of business organization, right, in which we state that for this course, okay, the main form that we're going to focus on is the corporation. Okay? And you should know what are the differences of a corporation as opposed to partnership and sole proprietorship, okay, for example. And we spent quite some time on in discussing the goal or the objective of a corporation, on what should be the most important, okay, goal or objective. Okay? And we look at the maximization of shareholders' wealth instead of maximizing the profit. Okay? And we discussed and also debated on why this is so, right? But of course, without forgetting there are other goals, okay, and objectives as well, including social welfare or including uh, the goods of the community surrounding the corporation. Then we look at the financial markets, where I show you the figure starting from the company, the capital market, as well as the government, okay, where the corporations have to pay taxes. Now, in topic 7, okay, we look at risk and return. Okay, we look at some measures on how to calculate return. Okay, not only the arithmetic rate of return, but also the geometric return as well, and the measure of standard deviation, okay, which measure risk, right, financial risk, and also the time value of money, okay, where I provided you with um, a detailed lengthy module on time value of money, as well as videos available in my YouTube channel, all right? And then we look at topic number 8, where we cover the cost of capital, the weighted average cost of capital, as well as the weighted marginal cost of capital, and some discussion on capital structure, but more on theoretical aspects of capital structure, and also capital budgeting. The capital budgeting is important, right? Um, there will be questions, okay, calculation questions on capital budgeting. So go through the notes, go back to the lecture, and look at the various questions that I have given you, okay, to look at the different scenarios, okay, that could occur in capital budgeting. And don't forget also that beyond the conventional way of calculating the NPV, we have also discussed about the extension, which is a follow through after calculating the NPV, which is to do the sensitivity analysis and also the scenario analysis, right? Followed by considering or taking into consideration the real options. Okay, there are 3 options, right? Remember, the option to expand, the option to delay, and the option to abandon the project, whereby if you take into account these real options, okay, your NPV would have been different. Okay, the originally positive NPV could have been negative, or okay, the supposedly negative NPV could turn into positive if you take into account the real options. And then we look at the working capital management, focusing on the cash conversion cycle. Okay? And you have to practice, okay, calculating the cash conversion cycle, right? And also the receivables management, okay, where there are some calculations involved in order to assess the credit policy, okay, of the company in lieu of the uh, uh, collection period that resulted from the current policy. So if you want to change it to a new policy, okay, you have to make some analysis. In this case, the NPV analysis. Okay. And then we look at some of the terms of the table in terms of taking credit from your suppliers, right? And overall, we look at how this is managed, okay, as a short-term financing or the working capital management. Okay, how does it entail the overall structure of your working capital? And finally, topic number 10, for the financial ratios, the calculation we have covered earlier, but in this segment, we focus on the some of the strengths and also some of the limitations, okay, of financial ratios. So what are some of the drawbacks, okay, of using financial ratios? Okay, there are quite a few. Among others, most of them are accounting figures, and they are subject to earnings management, right? And so because of their accounting statement, they are based on historical. So they may not reflect the future performance, okay, of the company. And finally, we look at the financial planning, okay, focusing on some of the important ingredients or components in financial planning. Okay, but this is more on a conceptual approach, okay, without any detailed calculation, okay, on this part. Right? So those are in short, okay, the recap of the 10 topics that we have covered throughout the course. Right? Thank you.